Is the dip in Lotus Bakeries stock a golden opportunity or a warning sign? At Insightful Value, we dig into questions like this, giving you a clear, data-driven view of undervalued companies without the fluff. And today, we're diving into a company whose share price has been slipping, but maybe not for long. This video is for informational and educational purposes only and does not constitute financial advice. If you enjoy objective, no-jargon breakdowns like this, hit that like button and subscribe to the channel for more. So what's going on with Lotus Bakeries? Most people know them for their legendary Biscoff cookies, those iconic caramelized biscuits that became a staple with coffee worldwide. But Lotus is more than just cookies. Based in Belgium, the company also owns brands like Nacht and Trek in the natural snack segment, expanding steadily into health-conscious products. Despite the strength of its product portfolio, the stock has been sliding recently. That's exactly what caught our attention. Let's take a quick look at the numbers. Revenue has been growing steadily year over year, even through challenging economic environments. In 2023, the company posted record revenues above 1 billion euros, continuing a strong growth trajectory. Margins have also held up impressively well. Their operating margin sits around 18%. Not bad at all for a company in the consumer goods space. This suggests pricing power and disciplined cost management. Now let's talk dividends. Lotus has been paying regular dividends and gradually increasing them over time. While the yield isn't extremely high, it's not a classic dividend stock, the consistent growth and the company's conservative payout ratio make it a reliable option for long-term holders seeking stability. So why the price dip? One major factor is valuation. Lotus had been trading at a very high price-to-earnings ratio for a while. Investors might now be pulling back as the stock adjusts to a more realistic multiple. Another concern is slower growth in international markets like the United States and China. Expanding into new markets is capital-intensive and takes time, which could be creating short-term pressure. Should conservative value investors be worried? Not necessarily. The fundamentals of the business remain strong, the brand is powerful, the balance sheet is healthy, and the long-term outlook for branded snacks remains solid. But risks do exist. Rising input costs, currency fluctuations, and slower consumer spending can all affect profitability. Still, if you're patient and focus on long-term value rather than short-term swings, Lotus might be worth watching. The company is reinvesting heavily into capacity and global reach, which could start paying off in the coming quarters. And remember, markets can overreact. Sometimes, the dip is just the market's way of resetting expectations. Will the stock recover soon? That depends on how well Lotus executes on its expansion plans and how the broader market treats high-quality consumer brands in a volatile economy. There's no guarantee, but the ingredients for a comeback are definitely in place. At Insightful Value, we provide in-depth analysis of companies just like this one, undervalued or overlooked firms with real stories behind the numbers. We make complex financial data simple and actionable. More details about Lotus Bakeries and other stocks worth watching are available on insightfulvalue.com. If this helped you see things a little clearer, give us a like, subscribe to the channel, and check out insightfulvalue.com for more. Thanks for watching.